You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it is time to rock out. Once again, you know the drill. It's the option block every Monday and Thursday, noon Central, 1 p.m. Eastern. We come at you live, breaking down all the latest fun going on in the world of options. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the old Options Insider Radio Network. Hopefully, you guys are enjoying the legion of earnings move and earnings move results reports that are hitting the site, season reports as well. Courtesy of our friends at ORATS. We are in the midst of it again, right? We are in earnings season again, so it's that time. If you want to check out that great free, it's all free. You should have to pay for this stuff, but it's all free content. TheOptionsInsider.com is the place to go to kick the tires and light the fires. We'll break some of it down here on the old show for you as well. And, of course, however you consume our content, make sure you hit us up. Those questions, those comments, those insights, those multi-part treatises you guys like to send us, all of the above. Keep hitting us up. We do indeed like to hear from you guys. And you know who doesn't really like to hear from you guys, but I make them do it anyway. It's the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Lion Capital. Mr. G, welcome back to the show. How are you doing with your strange social phobias there, sir? Are you getting a little better with that?
Am I going out? I've been trying to put out a couple of tweets a day just so people know that I'm still alive in Maine.
There you go. The Rock Lobster. That should be your daily tweet. Still alive.
Still alive, still trying to send out a couple things. It's been kind of fun, but people mostly ignore me because they don't know. I had 3,000 followers. I didn't even know that.
I think we're to blame for some of that. We keep sending people your way, and then you never tweet. So it's our fault. We've sent 3,000 folks to a very quiet Twitter.
I do try to retweet our stuff for the radio show. I do something. Not much, though.
To all 3,000 of you who we have led astray, I apologize. And to our next contributor, you don't have to worry about being led astray to him because he has no Twitter because the gods over there in compliance will not allow it. He is Uncle Mike TOSAW. What's Uncle Mike going to say on Twitter that's controversial? Nothing. Of course not. He is, of course, Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program. How goes your quest to get a Twitter account yourself, sir?
It might happen one of these days, and I'll tell you what, as soon as I get a Twitter account, if I ever get a Twitter account, I will definitely announce it on this show. My goal for the end of 2020 is to actually have a functioning Twitter account. I think I actually have one, but just with I want to make sure that some things are done right through compliance, and I really don't want to get in trouble with the people who keep me out of jail to begin with. And so hopefully by the end of 2020, I can say, follow me on Twitter at #.whatever, or I don't even know how to say it. So that's a big 10-4, breaker 19, breaker 19, and I'm out.
We'll we get those same poor 3,000 lost souls who follow the Rock Lobster to follow you as well. And then they too can write into us saying they never tweet anything as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Of course, I'm one to talk. I never use my really personal Twitter account. That's because all of my Twitter energy, all my social media energy is devoted to the Options Insider. That's the stuff that matters. That's the one you want to follow. My random musings on random things. I prefer not to share those with the world at the end of the day. But of course, welcome to the Trading Block. This is indeed the portion of the show where we break down what the heck is trading out there in the markets. And another spooky start to a trading week. You know, when you got the word pandemic lingering in the air out there, it's hard not to get spooked. Of course, that's weighing on it. We are in earnings season. We'll get to that in a little bit as well. Maybe some of that can allay some of the fears going on out there. But it is fear-mongering season. We're hearing more and more numbers. Talked about it on our Volview show on last week and indeed on the Option Block about how more people are quarantined now in China than pretty much live in all of California. So the numbers keep getting more dire, now up to, I think, 5 cases, if not more, here in the U.S., including one down the street here in Chicago. So that gets people spooked. Now these rumors coming out that this could be a bioweapon from the one Chinese bioweapons research lab, happens to be in that Wuhan area as well. Of course, if this is a bioweapon, it's a pretty poor one, so I think we could take some solace in that. Also, the fact that, the CDC and others seem to be on it. China, like they're saying, if this is a bioweapon, they're sharing the genetic code of the virus, so if that's a bioweapon, they probably wouldn't want that getting out. So it doesn't seem like there are some shared goals here between us and China and the CDC working on it. So I prefer to view it in the glass half full optimism, the Uncle Mike approach, rather than the rock lobster we're all going to die approach, which I'm sure he'll get into in a little bit. But of course, the markets are spooked today. Maybe not quite as spooked as they were, but still pretty spooked. Coming into showtime here, we're off well over 1% in all the major indices. S&P and Dow both off about 1.25%, and the NASDAQ feeling the thunder to the downside, off over 1.5%. Gold, of course, taking a rally, still can't break the 1,600 level, which is kind of interesting. And WTI, just, my God, getting annihilated. We were just over 60 not too long ago, 52.71 right now. So that continued fear of weakening demand as a result of this pandemic over there, all the impacts it may have on the travel and indeed on the energy infrastructure there, and demand just crushing. We talked before on TWIFO, just even last week, why is there still no bid for these calls? Well, in WTI, because they can't catch a bid to save their lives out there. And of course, our old friend VIX, that caught a bid today. Not quite as much of a bid as it had. It was north of the 17 handle for a while. Let's see how high do we get up there today. We started the day at 19.02 in the VIX cash. That's pretty frothy. Listen, that's pretty much close to where the October VIX futures were predicting for the election. That kind of came off quite a bit, and not too long into the day, we were at about a 17.5, and that seemed to be about where we hung out for the lion's share of the morning. That's up about 4 handles from where we were last show. We've come off that a little bit now, down to about the 17 handle, so about 3.5 handles is where we are from last show. Our old friend VVIX, as you might imagine, rocking and rolling. Volatility is moving, so VVIX is moving as well, up to 105, back north of that triple-digit level, getting frothy. That's up 11 handles from our last show. So vol is getting frothy, listeners. And of course, our old friend VXX, we just talked about it, how just not too long ago they had expiration, and there were, 50,000, I forgot how many puts on the Jan 14 strike that were sitting there, and we went through expiration, and it expired right around 13 handle after 1360, somewhere around that. So those puts worked out pretty good, and then fast forward a week, and bam, there we are back up again. That's why we always say the set it and forget it approach to VXX, particularly in Jan. So crazy stuff always seems to happen in Jan, right around the time that you don't want it to, because that's where everyone piles in their long-term puts. But yeah, you missed it by about a week. You got lucky. Of course, you saw someone else piled into the 13 strike not too long ago. Those bad boys, I think, went out last week, and I don't think, spoiler alert, I don't think they went past the 13 strike. So yeah, 15.4 right now. So that's up about almost 1.7 handles. That's a lot for VXX. So a lot going on. But you know what? I know what he's going to say. He's going to scare the hell out of all of us with his bioweapon talk and everything else like that. So let's start the day the sunshiny way. Let's go to Uncle Mike, sir. Uncle Mike, what do you have to reassure us all in the midst of this pandemic madness?
We're all going to die. There's plenty of reason to panic.
All right, that's it. I'm hanging up on both of you. We're done. Show's over.
Just kidding. No, I think that today is so we have three crazy things that are happening right now. We have the pandemic, but I'll talk about that in a second. We have the pandemic. We have the fact that there's issues with the U.S. Embassy in Baghdad that came out last night, and that really is what I think set the market going downward last night with the futures. We also have an impeachment hearing going on. Now, the impeachment I don't think is really that big of a deal to the market standpoint anyway. But I think that with those other two things, it's something to where I just kind of add a little bit more spook to the market, if you will. In terms of the pandemic, so my wife's a nurse practitioner, and so I talked with her about that. And her bottom line of what she says on this is that the CDC is not panicking, thus I am not panicking. Because I think they're making a big deal out of like roughly 10 or 12 deaths in this, but influenza kills thousands and thousands and thousands and thousands of people every year. And so with that, I'm not trying to discount the fact that we need to be cautious and do what we need to do as a society. But I think that this is what I would call in the panic stage right now from everything that I've researched on the potential pandemic that we have coming from China. Now, in terms of what's happening over in the Middle East, in that our embassy getting attacked over in Baghdad, that's obviously not a good thing, and we need to heed caution with that. We need to have an understanding that that can lead to some bad things. But from the standpoint of being the market participant with which I am, typically if something is very bad, two things happen. Number one, the market reacts to it. Number two, the market typically reacts to it before it happens a lot of times in some way, shape, or form. When something bad happens, oftentimes the panic selling that you're seeing, if you will, well, where does the money go to? Well, a lot of times it would go towards gold or silver, or both. Well, gold is actually up less than 0.5% on the day-to-day, and silver is actually down on the day. So with that, I think that from my indicator, my panic indicator, so to speak, is that we're not getting a lot of movement in the metals from this crazy information. And so it's because of that it's really not concerning me that much. Now, the position that I had going into today, I had some short premium that I put on some short premium Friday afternoon right before the close. And so the benefit of a day like today is that whenever markets go down, you can close out some short calls. So I closed out my short calls, and what would be really fun is if the market just shot right back up today with all my short puts that are still on the table. One of the things to keep in mind with this, too, is that on Friday, you did have opportunities to sell some short puts because volatility is higher and the market's dipping. The market was down on Friday as well. I sold mine fairly far out of the money, or it was some put spreads that I sold, and I'm still a long ways away from the where I would get out of them. I have my contingencies in. I'm managing risk like I always preach on the show, but I'm still a long ways away from where I would start to close positions. So what this offers, a market like this offers, is number one, an opportunity to buy, if you're a bull, of course, an opportunity to buy on a dip. But number two, it also offers the opportunity to participate in higher implied volatility. And so that's kind of the exciting thing about markets like this. Folks, we're 2.5% off of the all-time high in the S&P 500. I know it sounds pretty scary when you see all of a sudden 40 points down, 50 points down in the S&P 500, and whatever the Dow is doing. But ultimately, if you look at this from a percentage standpoint, this is almost something to where it's like, are we going to get a pullback yet or not? Because I wouldn't consider 2.5% a pullback. For those of us that have been around the game a little bit longer, the three of us, we've been around to where 15 points is, or I'm sorry, maybe 20 points in the S&P is about a 2% move, 2 to 2.5% move in the marketplace. And so it always seemed like people growing up in the marketplace, as well as a lot of our listeners, oh my, a 400-point move in the Dow, oh my, a 40-point move in the S&P. Well, that's really not that much. So yes, we're down a little bit over 1% on the day-to-day, but we're 2.5% off the all-time high. And I think this needs to be viewed as an opportunity for the bulls. I know I say this all the time, but I say this, I also mean what I say in terms of being short-term cautious, because if for some reason this is just the first shoe to drop, then you got to be ready to be nimble, and I am. I have all my orders in place. I have my plans in place in case I'm dead wrong, and all of a sudden we're at 2,800 in the S&P in 3 days. But I think just looking at this from the standpoint of logic, this could be one of your last buying opportunities, quite frankly. When we get things settled down in Iraq, which oftentimes we do, as the U.S. military is the greatest military force in the world, I think that's going to stabilize the market. And at some point, I think we're going to get the panic will kind of go away of this disease that's going around. And when those things happen, so long as you can handle the craziness in the near term, when those things happen, I really do see a lot of bullishness coming. So combine those things with the fact that we're making all-time highs seemingly every day in January, it feels like, you're going to get a pullback at some point. And when that happens, I just need to be prepared for it and manage risk in the best possible way. And that's what's going on today in Uncle Mike's world. And no, we're not all going to die today.
There you go. You heard it first here from Uncle Mike. This could be your last big buying opportunity for this crazy bull market we've been on. So maybe get out there, start looking at some of your levels. Now let's take the counterpoint to that. Let's take the more we're all going to die view. So let's head on out to the hinterlands, where he's already built his own compound out there, listeners. I should tell you how he's leaning. He's prepping. He's getting ready. Mr. Rock Lobster, sir. Let us all know, are we all going to die today, sir?
I don't think so. I think that might have been that's a little too gloomy and doomy. The one thing about stuff like this, as Mike had alluded to before, is you just don't know what happens in, the short term. Now with news and the news cycle that we have, you could see a lot of volatility. And I generally think, it takes 3 events to get VIX over 20. 3 what I would call like sort of macro-y, macro type of global funky that people don't expect. Because pretty much if the market's doing what you expect, you just have lower vol. So, as far as the China thing goes, we don't really know. But the only thing is it spreads like this disease. It looks like it spreads faster. That's all I can see from everything. That's the only thing I can kind of figure out. It looks like it spreads a little faster than everybody thought, but it's a flu, basically. So where it goes and how the rest, and I think the biggest thing is how the rest of the world ends up dealing with this. Like, do they stop flights out of China? Do people stop, is any kind of commerce starting to slow down from this? And if that's the case, I think we could see a lower S&P 500 pretty easily. But so far the pattern has sort of been, the news is kind of overnight. There's more, let's just say there's more cases. Then we sell off in the morning. And like TOSAW said, there's a little bit of Baghdad too. And then everybody kind of turns around because the selling sort of stops literally on the opening. Like that's the low print. We never see that low again. And then we sort of bounce it. Right. So it looks like.
Yeah, we're up pretty significantly since the open today.
Yeah. So it's one of those things where I don't know where or how far or whatever, how far we go down, but we're definitely bouncing. This looks a lot like Friday did, to be honest. So, but I think, VIX, it's fairly priced. It's 17. We moved like a 1.5% almost this morning. So the price is right, as far as vol goes, at least. I don't think it's overpriced or underpriced. And if we get back to the bull market, what is that, 33 something, right? So there's more reasons for the market to move, even though it's just headline news. And then, of course, we hope it just kind of blows over and it's not that big of a thing. But there's still what I would call sort of that overnight uncertainty, maybe to take all that. So I think it's hard to be short-term long. I think it would be easier to look for like some kind of longer term position, but unless you can, unless you have the ability to sort of trade what's going on right now, I think this is it would be like a tougher short-term market to be long, because just any dumb headline could send us down, another 50 points in the SPX or something. So it's a tough short-term long market, but it could be an opportunity. As far as VIX, you remember 50 Cent? He bought 300,000 of those calls.
He owns all the VIX. He owns all the VIX right now. So clearly he has a source in the Wuhan bioweapons lab.
His timing as usual is not bad. I'm going to say that for him. But as of right now, he hasn't turned around and sold. He or she, you never know, could be Miss 50 Cent, right? Have not turned around and sold all those calls out. So, there's 300,000 open interest, and you're not seeing those sales come back quite yet. So, we'll see. So they're the 22s. He paid a little less than 50. They're probably traded 90 to $1 today. So I just tweeted out 50 cent me 50 cent, which isn't bad 300,000 times if you're scoring at home. So, but I don't see the volume printing there yet. So I don't see that trade closing. So take that for what it's worth. But like TOSAW said, we bounced. It wasn't really easy to get any kind of like VIX call sales or anything off this morning. It was really difficult. It was almost like the bottom was sort of in. It was very hard to sell anything unless you had orders in that were literally like right at the market when we opened. That was probably the best sales time, and I don't think we got close once today for that same level. So anyway, this is where we are, and this is where we sit, and I think a lot of this market will be, at least for the next couple of days, we kind of maybe meander south. Then we bounce midday. We wait for some sort of overnight news, and then the market reaction that kind of sets the tone. So, because literally not much has changed from last week, realistically. But let's just say there's more short-term risk, and we'll see as the news comes out.
We shall see indeed. Let's see what the market is up to today. You might imagine it's a pretty active day, and you would be correct. As of pretty much an hour before showtime, most of the major indices had already hit their ADV. So coming into showtime, they're moving and shaking. Let's start in VIX land, where things are quite active. In fact, as of right now, it's pretty much exactly 500,000 contracts on the tape. If you've been listening to our shows for a while, you know that ADV has been creeping down for a little bit, well shy of the 400K level. It's a little bit north of that right now. It's 404 right now, but still, either way, it's well past its ADV out there in VIX land. So maybe I haven't had a chance to check, Mr. Rock Lobster. Maybe as of a few minutes ago, maybe 50 Cent is back to dump all those. But I think it is worth noting he has not dropped all those. So this would, you think, be one of those opportunities to do just that. But hey, clearly he likes his levels and he gets in for some interesting reasons. And of course, he has other positions on against. I don't think he's just swinging for the upside fences. But we talked about that before on Vol Views. We'll get into that, I'm sure, again, as he continues to buy up all the open interest, all the oxygen in the room out there in VIX land. Heading on out to SPY, we're at 2.5 million coming into showtime. Now it's about 3.2 million out there. The ADV is about 2.8 million, so SPY also pretty active out there. SPX, same deal. The ADV is about 1.25 million. We're pretty close to that right now, almost 1.2 million going up out there in SPX land as well. Fast forward out to NASDAQ and the Qs. The ADV is about 685,000. Just a tick under that right now, 661 as of a few seconds ago out there in the old NASDAQ land. So NASDAQ leading the charts to the downside, not quite leading the volume race, but still looking pretty active out there. And the Russell, aka IWM, ADV is right around 315,000 contracts. We're seeing about 353,000 contracts on the tape as of a few seconds ago. So a lot of action in the Russell as well. And people have always said, we talked about it on TWIFO many times as well. Russell, this domestic small cap index, it doesn't really move or shake with these macro tremors. Well, it's moving and shaking, and it's getting some volume certainly today as well. Speaking of volume, let's head on out to the other side of the fence, the micro, the individual names. See what's tearing it up today. Number 10 out there, by the way, cost you 125,000 contracts to break into the top 10 today. So fairly active. Maybe not quite as robust as you might imagine when the day when all hell is breaking loose, but still pretty robust. It's not quite our 60 or 70,000 we've seen on some of the lighter days out there. 125,000 contracts get you to number 10. That's Disney right now. Number 9, Beyond Meat back in the top 10. Interesting. I'll have to see. Maybe they have earnings going on. Maybe they have some new announcement. Maybe they're Beyond Pork lighting it up or not lighting it up. We shall see. Either way, 128,000 contracts on the tape for number 9. Number 8, the Widowmaker, a.k.a. Netflix. They kind of finally conceded last week in their earnings that, hey, competition from the world's largest entertainment company, not a good thing for us. It's eating into our numbers, but they're on the numbers. They're looking good for them today from a volume perspective. They're on the top 10 here, 160,000 contracts. Number 7, Microsoft, hot on their heels, a little bit above them, 162,000 contracts out there. Number 6, Bank of America, 177,000. Number 5, Tesla, falling out of the top 3, and all the way down to number 5. The insult, 221,000 contracts on the tape right now. Number 4, NIO. NIO's been in the top 10 a lot of late as well, as we're seeing a lot of movement and adjustments in Tesla. NIO also moving as well, this time to the tune of 230,000 contracts. Number 3, perennial top 10er, indeed top 5er, AMD, 263,000 contracts. Number 2, BABA. Kind of interesting to see how all this quarantining and everything else is impacting their sales over there. 283,000 contracts for number 2. Maybe people are locked at home, and so they maybe want to buy online. Maybe the deliveries can't get to them. Who knows? Interesting scenario over there. Number 1 with a bullet, Apple, once again, 415,000 contracts out there. So I saw someone pointing out recently, it was about a year ago when they had their earnings and they announced all their holiday snafus, and a year later, they pretty much doubled. So I guess all that's in the rearview mirror. Of course, they're popping off later this week, and we shall see exactly how things are faring. They're popping off tomorrow. Today, after the bell, we have Whirlpool, Juniper, Crane. Before the bell, we had Sprint and a few others. Tomorrow, we have 3M. Before the bell, Pfizer. And then after the bell, we have Stryker, eBay, AMD, and some fruit company. A good old SBUX as well. After the bell on Wednesday, Tesla, Microsoft, Facebook, PayPal. Some names you may have heard of, Mickey D's and AT&T and Boeing, our friends across the street there before the bell on Wednesday. Thursday after the bell, Amazon, Visa, Levi's, for all you who like the denim category. And before the bell, you got Verizon, UPS, and Coke. Mr. Buffett's favorite name out there. And on Friday, we got Exxon, Caterpillar, Chevron, a bunch of names, Honeywell out there. So it's a hot week. We're in it, listeners. So if you haven't already, head on over to theoptionsinsider.com. Check out those earning move results reports. A lot of hot stuff popping off there. Meanwhile, though, we have to keep popping off our own way. We have to head on over into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. It's time to get weird. Weirder than a pandemic and bioweapons and all that other stuff. Let's get out to some micro weirdness to allay your concerns, at least for a little bit. Going to kick things off, Mr. Rock Lobster. A quick check-in, if you will, on a name we just talked about. Remember we said they were trading a lot, right, going into their earnings. Let's see what's up with them. This is, of course, our old friend Intel, a.k.a. INTC, trading right now 66.18, down 230. Or about 3%. It's been a rough couple of days, but a decent week overall if you look back on how things are playing out. And as you recall, Mr. Rock Lobster, last week on the show we profiled someone just devouring a bunch of calls out there on earnings day. They were the June 70s. So it was interesting for a couple of reasons because they went out pretty far. If they were just looking at earnings, they went out pretty far. They bought a lot of extra premium maybe they didn't need. A big print of nearly 13,000 went up for $1.70. These are, of course, fairly out of the money calls. A total of 43,000 went up on the day. So clearly someone had a big axe to grind on that 70 strike out there in June. So we thought we'd keep an eye on these. They're obviously not expired yet, but we thought we'd do a quick check-in, see how they're faring. And initially, first blush, they were looking pretty good because if you watched Intel's earnings, Intel took off north, rallied about $5 on their earnings. So these calls were pretty much crushing it. they had pretty much, so you put them up for $1.60. They were trading well over $3, about $3.40 at one point. So he had pretty much doubled his money in the span of about a day, not even a few hours there. And then, of course, interestingly enough, looks like in the immediate aftermath the next day, when we were closing in on that 70 handle, so these are pretty much at the money calls then, we saw about 10,000 trade, but the OI didn't really budge. Maybe moved by like 1,000 or so. So it looks like that was a lot of kind of back and forth near at the money call trading in the wake of earnings. It wasn't really maybe this guy taking them off. If he did, someone else put them back on. So it seems like that was a lot of back and forth. So I'm going to chalk that up to not really taking anything off yet, because as of now, it seems like that OI is pretty much still there. It's pretty much still there to the tune of about 40-odd thousand out there. So interesting stuff. Worth noting, these calls are still looking pretty good. They are coming in. They're about $2.50 they were trading this morning for these bad boys. So they're still looking pretty good. He's still up almost $1 on these, so he could take them off for a decent profit whenever he wants. But Mr. Rock Lobster, this kind of goes back to what we were saying before. This guy went all the way out to June. So maybe he had other axes to grind beyond earnings, because he clearly was paying for a lot of premium he didn't really need if he just wanted earnings. So maybe there's something else to put out here. And so far, the fact that these calls worked pretty well, and yet he still has them all on, may indeed reinforce that argument. Is that your take as well, sir?
I couldn't remember if we liked this as more of a buy right or not, given where Intel was at the time. I'm trying to remember, but when was the last time Intel was up $5 on earnings?
Back when I was standing out there, probably.
It was a pretty amazing earnings report. I mean, this is a stock I like and that I own, and it's one of my bigger holdings as far as in a retirement account. Because forever just traded like a zero multiple. It doesn't have a zero multiple anymore. Although the earnings are actually the thing that's making it work now. So it's one of those. I still think I almost think of it as a value play, although it's not where it was as price wise, but it's still not a crazy expensive technology stock, although it is starting to pick up a small multiple at this point. But it seems to be, kind of humming along. So the technology cycle is relatively, it's on the high end, and I know they're a huge, a huge hardware producer, so they don't have that sexy software, but it's not a crazy multiple, even from a historical point of view. It's still around 13 or 14. They sit on a pot of cash. And there's all kinds of, you could say all kinds of stuff about them, from a value point of view for the company. But it doesn't matter short term if things are moving around. But somebody scored. If you would have thought back, when was the last time you could buy calls that far out of the money? And then, the earnings are just blowing people's minds. And, but if you think about it, just at least from a number point of view, the growth number was pretty huge. It's like earnings are up 20% year over year for a company that big. That's quite a bit. So, like I say, good for Intel. And then we'll see what happens.
Yeah, we kind of roundly mocked these calls last week, saying this guy's got a long road ahead of him, and turns out it was a short road, but he still has it ahead of him because he hasn't taken them off yet, which is interesting. Kind of interesting insight into how the tech landscape has changed in the few decades or so since I was standing out there. And everyone knew Intel back in the Godot 90s. Obviously, they were one of the big names. And now, fast forward a few decades, I was setting up a computer with my little guy this past weekend. He saw the Intel sticker on the front. He's like, Intel, what is that? What do they do? And it was just kind of funny because every 10-year-old on the planet knows Apple. They know Google. They even know Microsoft from the Xbox and things. But yeah, Intel, a name that has kind of faded into the past a little bit, at least from top-of-mind consumer electronic, certainly on the kid end of the spectrum. They don't make anything that's friendly to them. But it is kind of interesting to see how the tech cycle has rolled on, at least from a news cycle's perspective. They all even know Tesla and everything else, but they don't know Intel anymore, which is fascinating in and of itself. Let's see if our next name is equally fascinating. Moving on out now, away from Intel, out into the gaming side. Not that kind of gaming, the other kind of gaming where you put quarters in a machine and spin the wheel and test your luck. Going out to Las Vegas Sands Corp, ticker symbol LVS, also taking a drubbing today, down about almost $4, or about 5.5%, trading 64.14 right now. This is the name that looks like it's had a bit of a frothy year. A year ago, it was trading 56.25. Then it kind of got up to about 67 or so in April, and then it kind of sold off again in June, back to 52. Then back up by end of July, it was 63 again. Then back down to 52 again in August. It's like a little mini biotech here, up and down all year. A lot of peaks to troughs. So range bound could have been good for a lot of options trading and premium harvesting. Then it kind of broke out of that range towards the latter portion of the year. In December, it hit a high of 74.25. And then looks like immediately got annihilated in January, right back down to where it is right now, 64 and about a quarter or so. So, yeah, about rallying, sold off 10 points from that high. That's where we find ourselves now, listeners. Let's see what our Eye of Sauron found for us. Looks like it's a bit of a weird one, Mr. Rock Lobster. We'll have to do some parsing. Put on your analytical hat, your little accountant's visor over there. Because what first came across our radar was a big print of the May 60s. Going up for pretty meaty. Of course, these are in the money, over $4 in the money now. 18,565 of the May 60s going up for $6.80. That was our first kind of red flag of, that's weird. That's kind of beefy. Maybe there is something else afoot here. They were opening here, so that was kind of interesting in and of itself. So it wasn't a roll in and of itself, at least on this strike. So we did do a little bit of digging once this came across. This is one of those weird ones. And we did notice that right along that same time, not quite marked as spread, but within about 5 minutes of the other print, so probably related to paper, we saw the May 65s going up a little bit more, 20,500 of those for $3.60. Also pretty meaty, though they're out of the money calls as of now. The market on these things was $1.95 at $5, so that's a painful one. That one is not opening, which is kind of interesting. So maybe a bit of an adjustment, a bit of a roll down from the 65 strike to the 60s, but worth noting, looks like paper was probably buying. They're so wide, it's so hard to freaking tell, but probably buying the 65s, and looks like hitting the bid or near to it on the 60s. Those were much tighter. They were 660 at 705. Go figure. It's like you're trading stock at that point, so they should be a little bit tighter. Also worth noting, we dug a little bit further, just out of curiosity, and noticed that 21,000 of those May 65s also traded last week on the 24th, right before the stock got annihilated, $5. In fact, it looks like paper maybe have traded another $5 vertical right before the earnings went up. The 65-70 call spread right before earnings went up right around 20,000 times, the 19,000 on the 65s and 20,500 on the 70s. So, Mr. Rock Lobster, a couple different ways maybe to interpret this one. First off, maybe someone came in, bought an ill-timed $5 vertical right before earnings, 65-70. That one kind of went the way of the dodo. And so perhaps they're adjusting that down from the 65-70 down to the 60-65. Worth noting, though, again, the 65s are kind of the question mark here because that market was A, atrocious. It was $3 wide. So it's kind of hard to tell what the hell they were up to there. B, if they're rolling it down, it makes more sense. If otherwise, they might have just bought two of the 65 calls, in which case they're effectively long a funky fly, I guess, where they're short the 70s, short the 60s, and long 2x of the 65s. Either way, a bit of a weird one, a bit of a head scratcher. Mr. Rock Lobster, what is your Eye of Sauron over there telling you about what the heck this guy is up to in Las Vegas Sands? A bit of a call-palooza, sir.
Well, when we have to resort to some kind of funky fly description that we just really don't know what the heck is going on in the particular name. Although it seems like the stock, like everything this morning, the opening print was the low tick and then everything just bounced, right? So I can only guess because there's some 65 open interest that they might have rolled a portion of these down and then a second group of traded. That would be my best guess because I was looking at the prices and it looks like I was looking at some more time in sales. And it does look like, let me see here, that they did sort of hit the bid on the May 65s. And see, it doesn't go spread. They went up within 5 minutes of each other, around 20,000 contracts.
Yeah, they're not making it easy for us here.
No. Again, some kind of roll. It's really difficult to tell, but it doesn't feel like that that May 60 trade went very well. I looked at that.
No, it doesn't look like either of these went very well. I'm gonna put it in the to be watched. I'm gonna file it right now as a guy bought an ill-timed vertical before earnings, kind of pooped the bed with it, and so decided to roll it down, keep it in the same month, or roll it down to the 60-65. Either way, neither of those trades really lighting the world on fire. But we'll come back to this one in a little bit when we have more insight into the OI and everything else and what the heck is going on out here. I don't think he has legged into a funky ratio iron fly. Of course, we've seen weirder things. Either way, interesting stuff. We're going to wrap it up, Mr. Rock Lobster. We're going to return of an old favorite of yours. I think this will bring a smile to your face in this pandemic, death and destruction dominated headlines day. Zynga. Haven't talked about this one in a while. They of the infamous on the mobile game development front. Ticker symbol ZNGA. Trading pretty much $6 even right now, off about 1.5% today. Let's see how this one's fared. Like I said, it's been quite some time. It used to be an odd block staple. This is back like in the OX Grigas days. Used to talk about this one quite a while back. It's been a while. So let's see. A year ago, this thing was trading, well shy of where it is right now. It was trading $4.38. Like I said, it's at about $6 right now. Then it was a nice kind of slow rally, got up over 6.5 in June. Then it kind of sold off down to about $5.80 again. Then it kind of got back up over 6. Looks like it sold off again. Then was vacillating in that $5.80 to $6 range for a while. Then got a little bit over 6. And then recently, in middle of January, rallied up to nearly $7. Got to its high of $6.92. That was its high for the year. It looks like after that, it immediately sold off again. So maybe they launched a new game, and then that game petered out. Either way, the numbers looking good for them until they weren't recently. Now we're back exactly at $6. So let's see what our Eye of Sauron found in our old friend Zynga. I think somewhere right now, Mr. Grigas' ears must be burning. All right, 6 calls out in June again, going out to June. It was the June 6 calls going up for 66 cents through the offer, which is interesting. 7,577 times. That first caught our eye. Then, as we like to do some of these weird prints, dug in a little bit more and saw a lot more going up to the tune of another 2,000 going up after that, and another 1,100 going up after that, and 400, so on and so forth, all the way up to a total of about 17,000 as of right before showtime here. So someone likes themselves a little bit of the June 6s, Mr. Rock Lobster. Worth noting, these are opening prints. So this is opening paper here on the June 6 strike. So interesting. At the money call paper for size here, Mr. Rock Lobster. It's kind of a bit of an old school odd block one. Old school name. At the money call paper. Swinging for the fences out to June. What's your take on the return of your old favorite, Mr. Rock Lobster, the return of Zynga Call Love?
I haven't looked at this stock in years.
That's what I knew this would bring a little bit of nostalgic fun to your screen, sir.
It was a fun trade, and then it just kind of stopped. And
didn't you own the stock for a while?
I had like a funky backspread in this one, to be honest, and it made a little money. Originally, I was long it. I didn't make any money. I lost money. Then I backspread a little bit. Then I traded back and forth. I made some money back. And I haven't really looked at it since because remember they were going to go into online gambling and they're like, why do that? And then kind of all the action in it just died. Yeah,
it kind of sucked all the air out of their sails, yeah.
Right. So it was good then just because I was a little more ready for that. But like it's a $6 stock. I mean, I figured maybe somebody wants to buy them just because of the real estate they own in San Francisco. Who knows if they still own their building or not. But it looks like it just has become a growth company again. So are those June 6s for 60 cents an unreasonable purchase? No, I don't think so. So I don't think they're bad at all. But it looks like somebody does want some Zynga. I mean, the stock's up what? It's up 100%. I was trading 3 and change when we had the tech wreck last year, late in 2018. So, and now it's $6. So maybe somebody's doing a little stock replacement. You never know. They wrote it up for a double, and they're having a grand old time.
They are indeed having a grand old time. We're having a grand old time talking about this one again. So we're going to put it back in the to-be-watched category. Yeah, that used to be a frequent offender on the odd block. We talk about it all the time. And then, yeah, you're right. It kind of got the juice sucked out of it. Not quite as sexy, but someone thinks it's sexy again to the tune of about 17,000 at the money calls. So We're going to come back to these bad boys and see what is up with them. Meanwhile, it's time to find out what is up with Uncle Mike. It's Monday. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. It's that time of the week. It's time for Uncle Mike to hold court. And Uncle Mike, we're talking about all this crazy pandemic volatility and everything. We're all focused. In fact, the entire options world, really, at the end of the day, we call it premium, right? We're all focused on the extra stuff, the other stuff outside of the meat, the extrinsic value, if you will, sir, of all these darn there options. So might be a good time to chat about such things. What say you, sir?
I have plenty to say on it today. Now, I was thinking about this today, right as I was leaving the gym to go into my car on the way to the office, in terms of how this can be explained and a good way of thinking of it. So let's say that I sell a call option, an out-of-the-money call option. I know that we don't really advocate selling naked options on this show, but I'm just kind of using this as an illustration to show a point. When you do so, you need to have an understanding of the factors that can affect extrinsic value of the option. Primarily, you have theta, you also have vega, and then you also have delta. So what I mean by that is that how do you ultimately get it? So if you're selling premium, you can make money on volatility, you can make money on time decay, and you can make money on the movement of the underlying. Those are the three basic ways you can make money on. Now, of course, you can have some other events such as special dividends. You can have, in theory, row could play a factor in it. But what I want to focus on are the three primary movers of extrinsic value. So the way that I like to look at it, let's say I sold a call option because I'm bearish neutral on XYZ stock. Well, what theta is just think of it as a wet rag. You make the rag wet and you just kind of set it out there on the table and you have a wet rag. Now, eventually that water is going to dry up. It's going to evaporate and the rag is going to be dry at some point. It might be a day. It might be a week. I'll leave that up to the scientists to tell you how long that'll take. But eventually it will dry up. Just like time decay, eventually the time decay will dry up, and that option is going to eventually not have any extrinsic value in it. Now, of course, if it goes in the money, then it'll have intrinsic value in it. It could still be a losing position, but all extrinsic value goes away at expiration. That's an undeniable fact of life. So what I want to go through today is what to do when you have an event that affects this wet rag, whether it is a volatility event or a delta event. We kind of had both today. So to give you an idea of it, like I said, you have this wet rag. Now let's say that the market were to go down. That would be a delta event, meaning the market were to go in your favor because, of course, you're short deltas. Well, by doing that, that's the equivalent of someone stepping in there, grabbing that rag, and squeezing out a lot of the water. Now, once again, I want you to really have an emphasis of it. That rag is not completely dry. You can squeeze and squeeze and squeeze and squeeze, but that rag is not going to be dry. You still have a little bit of water in it, and that water is not going to go away until expiration. That's when that rag is going to be completely dry. So what I want to emphasize right now, and I've made this point before a few times on the show, is that my rule is that when 80% of the extrinsic value is gone, then I'm gone. That's when I want to get out of it. So in other words, if I were to have sold that call for $1, I'm getting out when it's at 20 cents. That's just kind of a general rule that I like to have. And the reason is that those last 20 cents, I don't care how hard you squeeze that rag, you're not going to make that rag completely dry. And holding out for those last 20 cents is very similar to that. Yes, if the market were to go down a very, very large amount, or if you wait until expiration, you'll get those 20 cents out of that premium. But it's very hard to do, and it's very hard to come by. So that's why I like to get out when the market gives you a rag squeeze, so to speak, if it goes in your favor. Now, the other way with which this could work is if volatility dropped. So understand, when you're selling premium, it's not just a time decay play, it's a volatility play as well as a delta play. Let's say that in theory the market were to stay the same and volatility were to drop a lot. Well, if that were the case, then value would come out of that option quite a bit as well. And once again, I want to emphasize that, yes, if you let the rag sit, eventually it'll become dry, just like if you wait till expiration. But it's a long wait, and if you have 80% of your premium already, I think it's very difficult to hold out for that final 20% of it. Sometimes it makes sense to do. In hindsight, it would have made sense to just sit there because you'd been fine. But oftentimes, I'm of the school of thought that if you can take that much of a profit, I think it's very wise to do so. So what volatility and market movement are, it's like squeezing the rag. It forces some of the extrinsic value out of your short option. Time decay, that's just what naturally happens. And all of that wet rag will be dry by the time expiration comes around, even if you just let it sit there. So what I want to emphasize today is that don't try to squeeze out that final 20 cents or that final 15 cents, or that final 30 cents, whatever it is. You could make an argument for it either way, but at some point, you really need to close out short options if the market gives you a free rag squeeze, whether it's through volatility or through market movement. And on days like today, first thing I did as soon as the market opened this morning is I was closing out short calls. I couldn't wait. I actually got out probably at maybe like 23% I had left of the potential premium decay about, maybe 24%, something like that. But that even though volatility was still high in the morning, if I'd have waited more throughout the day, I probably could have gotten out for a few pennies less. I'm just kind of looking at it now. I probably could have gotten a better fill if I'd have waited because more volatility came out of the market. But that's okay because of the fact that I like the idea of having an open upside now while still being in my long options and still having a lot of deltas on the table. I think it would have been foolish to try to keep trying to squeeze every penny out of the short, especially in a situation like this. So understand how extrinsic value works and have rules as to when you want to get out of short options.
Well said, sir. Now it's time for us to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. This is, of course, a portion of the show. We tell you what we're watching on our trading screens until we all get back together here on Thursdays. Normally, where we also would say, hey, we're all keeping our eyes glued to the screens for Apple and all the other big names coming out this week. But certainly the micro stuff is interesting and on the radar, but a lot of macro concerns are lingering there at the top of the list as well. Let's go back around the horn and see what everybody's watching. Let's start with the Rock Lobster. Sir, what is on your radar until we gather here together on Thursday?
Well, so a couple things besides this pandemic thing, which I hope, the news improves. It's kind of like, it seems like it's now, we're kind of getting into the close, or starting to get closer to the close, so it's not as, it looks like it might be selling off a little bit again. But, and also like oil, anybody look at Exxon? I think Exxon is like a 3-year low right now. So like big multinational oil hasn't recovered from the whole Davos thing, and I don't know if every major fund, all the major funds are just divesting. I don't know. I think that's an ongoing story, but I got to be honest. I think we're going to see like much lower lows for these oil stocks. This could be the bottom, I guess, but there feels like there's no end of selling, and there's been no end of selling in these names. So interesting. So I'm looking at both those things, and VIX is 17. It's kind of fairish. The futures are extremely flat, which usually is like a signal where vol could make a larger move either way, not a small move, but a large move. So, and I'm kind of sitting there and seeing what's going on. But most of the curve is it's like one of these weird shapes where little contango, but the cash is relatively high. So it's, again, a very flat curve is usually a very unsettled VIX. That's what I would say.
An unsettled VIX, indeed. Mr. Uncle Mike, sir, are you unsettled as you watch all the news unfold over the course of the week?
Hey, I know where I'm going when I die. I'm far from unsettled. But in terms of the short-term movements that we're having, definitely cautious. I always say on this show, I'm long-term bullish, short-term cautious. My finger is on the get the heck out button on my keypad. That's literally what says get the heck out. And so I think that's important to really be cautious at a time like this, but also seize the opportunity at the same time. I think now is just a great time to be doing some of the things I talked about at the beginning of the show, as well as what I talked about in the strategy block. Be ready for it. And but once again, be ready to get the heck out.
All right, everybody. That music means it is time once again for us to bring to a close our options journey, sadly. But you know what? If you're getting sad, don't get too sad, because we got more in store for you in a little bit. We'll be back in about exactly an hour to break down all things in apparently the new flight to quality crypto. We had a lot of great guests on that show lately. Hopefully you've enjoyed it. Got some fun stuff coming up for you in a little bit as well. So stay tuned for that. If you're listening live, we'll pump some fun stuff into the live stream, the live chat. We'll be back in exactly an hour to talk all things crypto. Or, of course, on your device of choice, if you're listening right now, just hit next. It'll be there waiting for you with a smile on its face. But before we go, let's go back around the horn, see what everyone's cooking up that may intrigue you. Let's start with Uncle Mike. Uncle Mike, let's say I'm spooked by these markets. I just don't want to deal with it anymore. I want someone else to deal with it for me. Maybe someone who has their hands poised, I should say, on the old get the heck out button. Where should I go? What should I do?
stcharleswealth.com. Make sure you click on the Fox. Absolutely nothing will happen, but make sure you click on it so you can obey Mark Longo's instructions of the past few years. Would love to work with people. This is if you're in a situation to where you're happy that the market's higher, but you're just concerned of it going down, but yet you don't want to get out of the market, but you're just not quite sure what to do, and you have that horrible feeling in your gut, call me. Options can help you, and I can help people with options, and that's what I do. stcharleswealth.com.
stcharleswealth.com. Click on the Fox for fabulous prizes, or perhaps absolutely nothing. I guess you'll find out if you head over there and click on it for yourself. And last but not least, Mr. Rock Lobster, if folks want to dive deeply, perhaps they want to join a cool club with fancy jackets and cool hats, where should they go? What should they do?
Come on over to Option for the Vol Trading Club. Check it out and learn how to trade volatility. Learn how to hedge a portfolio. Learn how to have the market pay for you hedging a portfolio. Get stuff for free, and on days like this, you're mostly just trying to figure out how to take some profits. So you want to learn how to do it, learn how vol works, come on over to Option Pit and do it.
Head on over there, optionpit.com. They got sweet jackets. They got a cool smoking lounge with smoking jackets. They're having cool MAGA hats coming out soon, which doesn't stand for what you think of. It stands for, I think it was Microsoft, Apple, Google, and Amazon. That's the ones Mr. Meatball was talking about on VVIX there on Friday. So get your sweet hat, get your smoking jacket, learn the cool secret handshake of the Option Pit Vol Club. Optionpit.com is the place to go. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, stay calm out there, stay safe, stay sane. We'll be back on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.